Press the bell icon on the YouTube app and never miss another update.
Friends, we are back again with another marquee investor portfolio on your channel Profit in Equities. Now today we will be talking about Dolly Khanna's portfolio, which she holds at the end of 2017 and which in default would mean that she would hold at the start of the year 2018. Now friends, we had also prepared a video on Dolly Khanna's 2017 portfolio, for which we will provide a link at the top. Now if you like the content that we produce for your channel, please do give us a thumbs up and also subscribe to our channel because it motivates us going forward. Now Dolly Khanna is one of the most successful stock investors in India. Her portfolio is actually managed by her husband Rajiv Khanna, who is an astute stock picker. Here we take a look at 10 stocks from her portfolio. Now friends, we were divided between going ahead and splitting it into two videos, but then we thought about preparing one single video. So please excuse the fact that this video is a bit long and stay tuned for watching more. Now the first company on the list is Rain Industries Limited, which is available at 361.20. The code for the company is RAIN. Now Rain Industries Limited is an India-based company which is engaged in the business of manufacture and sales of carbon products, chemicals and cement. Now if you were to look at the 1-year chart, it's been a beautifully uptrending chart and a lot of wealth has been created here. The company is a mid-cap one with a market cap of 12,148.81 crores. The EPS is 16.1750, which means it's available at a price to earnings ratio of 22.3308. This is below industry PE of 45.91. The book value is 94.09, which means that the company is available at a very expensive price to book ratio of 3.8387. Now the promoter holding here is on the lower side at 41 and the 52-week low is 42. Now friends, the fact that you must remember is this is hugely linked to the commodity with which it has a correlation, and hence the fluctuations in that could basically go ahead and largely affect the stock price as far as Rain Industries is concerned. Also, this is a company in which the holding of Dolly Khanna is worth more than 250 crores. So this is one of the major parts of a portfolio. The second company on the list is Tata Metallics Limited, which is available at 813.15. Now Tata Metallics Limited is engaged in the manufacture of foundry grade pig iron. The company manufactures and sells products such as scrap pig iron and granulated slag. Now if you were to look at the 1-year chart, it's been on an uptrend, but of late there has been some sort of a consolidation. The company is a mid-cap one with a market cap of 2056.29 crores. The EPS is 49.14, which means that the company is available at a price to earnings ratio of 16.55, which is largely in line with the industry PE at 16.81. The book value is 81.93, which means that the company is available at a price to book ratio of 9.92. Now this is pretty expensive. The debt to equity ratio is 2.2312, whereas the return on equity is 0.6056. The promoter holding for this company is average at 50%. Now the 52-week low is 280. Now friends, this also is a part of the commodity cycle, and so one must go ahead and exercise caution because we never know when the commodity cycle turns, and then there could be a lot of price erosion if there is a case of a commodity cycle waning. The third company on the list is Amar Jyoti Spinning Mills Limited, which is available at 176.65. Now Amar Jyoti Spinning Mills Limited is engaged primarily in the manufacture of yarn. The company owns approximately 10 windmills also. Now if you were to look at the 1-year chart, the company has largely been all over the place and has not created any major wealth for its stakeholders. The market cap is 118.46 crores, which means that the company is a micro cap one. The EPS is 16.57, which means that the company is available at a price to earnings ratio of 10.59, which is largely in line to its industry PE of 10.90. The book value is 145.50, which means that the company is available at a price to book ratio of 1.21. The debt to equity ratio here is 0.6180, whereas the return on equity is 0.1529. The promoter holding here is on the better side at 70.35. Now friends, Dolly Khanna is very bullish on a lot of textile stocks. So beside this, she has some other textile stocks also in her portfolio. And this is largely in line with other stock market stalwarts who also have been bullish on textiles or related stocks recently. Now the fourth company on the list is Dwarikesh Sugar Industries Limited, which is available at rupees 47.65. Now the code for this company is DWARKESH, and this is an India-based company which is primarily engaged in the manufacture of sugar and allied products. The company is also involved in the production of power and ethanol industrial alcohol. Now the company's segments include sugar, cogeneration and distillery. Now if you were to look at the 1 year chart, you would see that the stock went up till about the half of the year, but since then has been on a slide. The market cap of the company is 897.26 crores, which means that the company is a small cap one. The EPS is 9.48, which translates into a price earnings ratio of 5.03, which is cheaper than the industry PE of 7.99. The book value is 15.16, which means that the company is available at a price to book ratio of 3.14. The debt to equity is 0.3286, whereas the return on equity is 0.5870. Now the promoter holding here is also on the lower side, which is 41.87. Now the 52-week low is 20.65. Now friends, just like as I said for the other commodity stocks, the sugar cycle also is a big determinant in the stock prices of these companies, so one needs to be careful going forward. Now, the fifth company on the list is Dhampur Sugar Mills, which is again in the sugar sector, and where Dolly Khanna seems to be very bullish because she has been increasing her stake. The company is available at 229.20, and the code for the company is DHAMPURSUG. Now Dhampur Sugar Mills Limited is an integrated sugarcane processing company, and the company is engaged in the manufacturing and selling of sugar, power and chemicals. The company operates in three segments: sugar, distillery and cogeneration. Now if you were to look at this chart for the company, this also has seen a lot of rise in the initial part of the year, but since then has been on a slide. The market cap is 1521.60 crores, which means that the company is a small cap one. The EPS is 44.47, relating into a PE of 5.15. This is largely lower than the industry PE of 7.99. The book value is 99.72, translating into a price to book ratio of 2.30. The debt to equity is 0.9470, whereas the return on equity is 0.3073. The promoter holding is on the lower side at 49.09. Now the dividend yield is pretty good and is much higher than 1%. The 52-week low is 94.70. Now friends, as I said earlier, we need to be a bit careful on this sort of commodity stocks going forward. The sixth company on the list is Ruchira Papers Limited, which is available at 198.75. Now this is an India-based company which is engaged in offering paper and paper products. The company is engaged in the process of manufacturing writing and printing paper and also craft paper. Now if you were to look at the 1 year chart, you would see that essentially the stock had done well for the first half of the year, but since then has been on some sort of a consolidation. Some people could also interpret it as a rounding bottom formation. Now the important fact to mention here is that there is some optimism on the fate of paper companies going forward. Now the market cap of the company is 445.63 crores, which means that the company is a small cap one. The EPS is 16.73, which translates into a price to earnings ratio of 11.88. The industry PE here is 15.23, which means that the company is cheaper compared to its industry benchmark. The book value is 68.13, which translates into a price to book ratio of 2.92. The debt to equity is 0.3174, whereas the return on equity is 0.2422. Now the promoter holding here is on the average side at 61.14. The 52-week low for the company is 89.10. Now it being a small cap leaves some scope for appreciation, and with the positive outlook for paper companies, we might see some good price movement in the coming months. Now the next company on the list is Manappuram Finance, which is available at 116.80. The code for the company is MANAPPURAM. Now Manappuram Finance Limited is a non-banking financial company, and this is engaged in offering gold loans, microfinance, housing loans and commercial vehicle loans. Now if you were to look at the 1 year chart for the company, you would see that the company has been absolutely steady for the last few months and there has been no such price movement. It's more of a consolidation pattern, but of recent has been a large spike in the company's stock price. The market cap is 9834.10 crores, which means that the company is a mid cap one. The EPS is 8.97, which translates into a price to earnings ratio of 13.02. This is largely much below the industry PE of 46.49. Now the book value here is 39.32, which translates into a price to book ratio of 2.97. The debt to equity here is 2.5615, whereas the return on equity is 0.2166. The one concern here is the fact that this company has a very low promoter holding of 34.45. Also, the debt to equity ratio 2.5615 is on the higher side and is a cause for concern. The 52-week low is 57.80. Now coming to the next company is IFB Agro Industries Limited, which is available at 903.60. Now IFB Agro Limited is engaged in the business of manufacturing alcohol, bottling of branded alcoholic beverages, as well as processed and packaged marine foods, both for domestic and export markets. Now if you were to look at the 1-year chart for the company, you would see that after being on a consolidation for the first half of the year, the stock had a spike and seems to be moving more in a ladder sort of a formation, which is not a technical formation, but it's just an interpretation on my part. The market cap is 846.41 crores, which means that the company is a small cap one. The EPS is 35.36, which translates into a price to earnings ratio of 25.55. Now this is much cheaper compared to the industry PE of 135.66. Now the book value for the company is 302.13, which means that the company is available at a price to book ratio of 2.99, which is also on the decent side. The EPS of 35.36 is also pretty decent. The debt to equity here is 0.1630, whereas the return on equity is 0.0987. Now the promoter holding here is on the better side at 65. Now this being a rural agri focused play could have some positive movement going forward. Now the penultimate company on the list is LT Foods Limited, which is available at 85.55 on the exchanges. The code for the company is DAAWAT. Now LT Foods Limited is a branded specialty foods company which is engaged in the milling, processing and marketing of branded and non-branded basmati rice and manufacturing of rice food products in the domestic and overseas markets. Now if you were to look at the 1-year chart for the company, you would see that during the initial part of the year, the company was on an uptrend, but since then it's largely been consolidating. To the technical analyst, it may seem as if a rounding bottom formation is getting created here. The market cap of the company is 2282 crores, which means that the company is a mid cap one. The EPS is 1.30, which translates into a price to earnings ratio of 65.81, which is very expensive. The industry PE here is 37.91, which is much below the company's PE. The book value is 13.59, which also leads an expensive price to book ratio of 6.30. The debt to equity is also on the higher side at 2.1852. The return on equity is 0.1968. The promoter holding here is on the better side at 67.16. Now the 52-week low is 21.52, whereas the 52-week high is close to 89. Now the final company on the list is NoSil Limited. Now NoSil Limited is available at 180.60 and the code for the company is NOCIL. Now NoSil Limited is an India-based company which offers basic organic chemicals, and the company is engaged in the business of manufacturing and trading of rubber chemicals. Now if you were to look at the 1-year chart, this is a beautifully uptrending chart and has created a lot of wealth for people, including me. Market cap of the company is 2968.73 crores, which means that the company is a mid cap one. The EPS is 7.52, which translates into a comfortable price to earnings ratio of 24.02. Now this is below the industry PE of 30.85. The book value for the company is 36.17, which means that the company is available at a price to book ratio of 4.99. The promoter holding, however, here is a matter of concern at 36.85. Now friends, please be aware that we had this in our portfolio but we sold off. Also, any of the stocks that you see here are not a recommendation on our part. All of these are just the stocks which Dolly Khanna holds in our portfolio. So she may have her reasons for owning them. We are not aware of them and we just wanted to provide you the information as and when we get it. So please exercise your own due diligence and do not treat this as a blind buy. So this is all what we wanted to show you for today.
Thanks for watching, and we will see you soon with another video.